Good morning, good morning, good morning. Happy Sunday. I hope that you enjoyed your Thanksgiving, first of all. Those of you who I didn't see on Friday, enjoyed your Black Friday shopping. Good morning, Bob. Good morning to you, Press. We're going to give it just a minute or two to let anyone trying to get in, let their audio get started. And go from there. You should be able to see my screen. Good morning to you, Perry. All right. Well, we'll let everyone else catch up to us. Let's dive right in. Welcome out everybody to the Market Watch Group weekly market prep. Oh, I love Sundays. One of the reasons, if you're newer, you'll hear me talk about the professor and the chimp and the computer. And it's a I don't even know how you do metaphor, series of metaphors. I read about when I was reading a book with my kids about sports psychology, and my son was recovering from an injury, and I found this book, and I was like, oh, it's great. And as I go through it, and I've always known there's a lot of parallels to between something like high level sports and trading, and really it's more about, in my opinion, performance psychology, right? Where we're constantly doing our best at execution, and not making mistakes. That's what it's all about. And if you look at the top 10 trading mistakes document, and some of you might not even, you'd be like, what document are you talking about, Scott? In the welcome doc that you get a link to every day in your emails, there is a top 10 trading mistakes that you can download and print off and save for posterity, and it explains them and what the mistake is. You'll realize the most 10 of the most common mistakes, the vast majority are just self-sabotage, right? We're just simply doing the wrong thing at the wrong time. It's not like, oh, the market, I don't know, whatever else it could be. It's just that we simply shoot ourselves in the foot on a regular basis in trading. It's a frustrating thing. I'm sure you're like, yeah, I've done that. Of course we have. So, anyways, take a look. But Sunday, the reason I like Sunday so much is because Sunday, the chimp is asleep. There's nothing going on that could make the chimp, rile up. The chimp riles up when there's heavy emotion and volatility and fear and risk, and things are going wrong. Things can't go wrong on Sunday. It's no different than it was when you watched it shut down on Friday. This is where we have a chance to just sort of relax and really make sure that we see things correctly. See is the key word. What are we seeing going on in the market? Because you're going to go to Yahoo. You got to go somewhere for news. Yahoo, Bloomberg, CNBC, whatever. Find a news source. But there's always going to be news and opinion. And when you see opinion, it's mostly fear. Oh, the recession's coming. This is coming. That's coming. This is bad. This could happen. Mark my words, you'll see it. So what we do is try to focus on what do you see happening, and you learn to trust the system, that if something negative is going to start to happen, we'll see it. It doesn't just like overnight. I mean, could there be a time when something could, like if there was like a nuclear bomb? Yeah, but we have worse things to worry about than the market at that point. But other than that, things develop, and we have the ability to see it coming and to adjust. And that's what we're trying to do. All right, let's dive in. Weekly market prep. My name is Scott. Let's talk about it. Here's the disclaimers. Here's the agenda. I know it was fast on the disclaimers. You're like, what are you doing, Scott? They're in your emails. Always in your emails. If you ever want to read through those disclaimers, they don't change. They're the same every time. They're your basic disclaimers. Today, we are going to do market posture. Of course, step by step. And again, I know that there's always new faces. And when you're new, you watch what we do and you're like, okay, I'm a little bit behind that. Remember that each component has its own video that you can watch where I talk about it. There's an entire session on market posture in our Trading Foundations course. And that entire Foundations course, all of the links are in your content library. So there is a lot of video resources with education where you can just sort of go find what you need to help you better use what we're doing here and to better complete your trading plan. That's the product of everything that we do should be your trading plan. Don't forget that. We'll talk about today. We'll search. We'll maintain the watch list. We're going to drop things that are no good. We're going to add anything new. And remember that I'll update the watch list and the market posture so that if you go look at the historical record, you can find everything that we've ever done for posture and you can see what the current watch list is so that you can replicate it. And we'll talk about trade opportunities. And I think that we have a good number of trade opportunities setting up in a lot of different places. It's broad. Our posture is improved. I think we're going to see it improve today. I think we have nice opportunity in front of us. And so here's where you have to, you help people say, oh, the yield curve's more inverted than it's been in a while. I actually read that this morning. That's why I brought it up. I'm like, I think it first inverted like a year ago. And since then, it's done quite well, the market. So be careful with people trying to, show you some fearful thing that might happen. And we'll talk about the trading plan section of the week. Where are we? I believe we're on routines. That's a big one. Section 5 is routines. We just finished risk management. We're moving on to routines. All right, let's dive into it. Let's see. Oh, okay, yep, we are on routines. Here it is. We're going to get to this in a little bit. Here we are today. Stephen, I saw you. Stephen here? Oh, he's not here. Okay. Stephen sent me a copy of my spreadsheet where this it's only 2 steps and then I have to type the new date. So it's not like it's this, really arduous task. But he created he's good with spreadsheets and he says he created it with a macro. You can hit a button. It does it automatically. So I'm like, hey, okay. I haven't as soon as I get it, I'll distribute it if it's working great. Anyways, so we add it. We're always working to the left. So historical, we have to go out here to find how we used to see the market and trace back what was going on. Over here, we're gonna always keep it right what's going on now. For me, if you ever notice when I post the emails, I give you the last 5. And that's what I'm mainly focused on. So here you can kind of see what's going on. Is there a trend there? Clearly, there's a trend here. Clearly, look at it. Look at that strength coming in. The stronger it gets, the more it gives us the ability to alter and get more aggressive with the actions that we take. Okay, so as we get started, anyone who's been around a while, feel free to drop your score in if you want to give me yours and then see where I end up. I like the thought of you coming here having already scored it rather than waiting. I know a lot of you are just going to be watching and that's what you're working towards is seeing it for yourself first. What I'm not trying to do is teach you how to see it how I see it. I want you to analyze it how I analyze it. That's the difference. Okay. Long-term trend. Let's dive in. Something was going slow. I hope it. Let's go 3-year weekly. Yeah, everything looks fine. Okay. At this point, you can see very clearly where we are and what I think is happening. I've got my trend line in place and I leave it here. For a minute or two back in July, we broke above this and then we fell back in. When we broke above it, my score improved and then it dropped back when it came back down. And then over here, when it dropped below it, it dropped. But then it raised back up when it came back in, because overall, all I'm interested in doing is scoring the strength of this trend here. Now, you can see back in 2021, when we had anyone trading back then? Good, really nice bull market. A very bullish posture for the entire year. Why? Well, because look at the start. Look at this uptrend. This is a 0.75. So what do you think I was over here? 1.5. Right? I mean, that's very close to as good as it gets. You don't see long-term trends typically moving above about a 45-degree angle. Just, it's unsustainable when you're looking at a weekly chart, right? So this is a great representation. Clearly, if I had a trend that was moving like this, right? That was just, you can imagine bouncing up and down in here. That's a 0. What are we right now? I'm a 0.75. Somebody else said they're a 1. Yep, that's fine. If someone said 0.5, I'd be like, yeah. This, if someone said they're a 2, I'd be like, how could you possibly be a 2 here if you can see that there is a stronger trend over here? 2 is as good as it gets. I'm very reluctant to go to as good as it gets when I score things, because once you do, if things improve, you have no way to actually put that into your scoring process. So that's what we're doing. Score the trend. We don't care where it is in the trend. We don't care how strong this is. We're going to talk about that when we get to short-term trend. All we care about is long-term trend. That's it. You might think, well, why not? Why wouldn't I care if it's up here at resistance? I don't care about it when I'm scoring the market. I care about it when I am, remember that this is your market posture. This is how you see things overall. Then every day you have a trading posture. What are you actually doing? Market posture is just, hey, what kind of market are we in? Who's doing what? Where's the money flowing? How do the institutions see things? This does not mandate or dictate day-to-day action. Day-to-day action is market posture. There's a lot more short-term technical analysis of support and resistance and patterns, right? There's many other things at that point. This is just kind of our overarching, like, this is our context, right? So, okay. Let's see. Let's keep going. Let me delete this. So what is my score here? The same, right? At this point, there's not a lot of chance that I'm going to change this. It could come all the way up to here. I wouldn't change it until it broke. Then I would give it an extra tick. Otherwise, I think there's a good chance it comes up here and then it could meander back down. And then who knows how long it might take, right? It could move and come up in this area and then slow down. And then all of a sudden around here, we have a little bit of a pullback. It could last all the way until here. We could move up and flitter around and then move up and then all of a sudden pull back. I mean, who knows, right? All I know is right now, it's strong. This is where we're moving. Okay. All right, let's keep going. 0.75 is good. Short-term trend. Please give me your scores. Tell me if you see it differently. Let's get discussions going. I want you to feel comfortable validating your thought processes here, where you say, oh, I thought it looked a little better. Oh, okay. Yeah. I mean, we're here to collaborate and make sure that ideas are flowing. Okay. Let's go short term. Let's go short term. Staying at 1. Okay. Now, this is 2 hours. I missed my chart. That's what I'm looking for. What's going on and what went on last week? So last week, we knew would be interesting, but really it was everything that came on Monday. So on Monday, we went higher. We took out a high. We had said that this was our resistance. You might think why? Because this is not, that's where it opened, closed down there. So we did take that out. For me, that's worth 1/4 point, but that's all it did. It did that. And then the next couple of days, it did meander higher a little bit. So you can see it drifted higher. It was able to move higher, not with a lot of conviction. We knew there was unlikely to be anything remotely near above average for a volume day. We'll talk about volume next, but I'm just saying, when you look at what happened last week, we had one day where it popped. The others were just doji, just sort of moving around where that first day was. However, the first day was strong enough that it gives me another point. Now, here's the thing. The hard thing about scoring the short-term trend right now is we really only have this one little mini consolidation. So there's been a lot of momentum here. We're wondering, are we going to get one of these, or is it going to look something like this, or is it going to be even bigger? I mean, we're not sure what the next. We're overbought. We've been overbought for a little while. We're thinking, at what point do we have a consolidation, and where does that consolidation come? When that comes back down and then turns, that's when I'm going to be able to draw my next line, right? So then I can say, okay, let's connect these dots, and now I'm going to think that's my short-term trend. Or maybe it comes down like this and turns, and then I think, oh, that's even stronger still. It's hard right now, so I'm giving 1/4 point based on accomplishments, break support, higher high, whatever it might be. I want to make sure that I represent this, that there is increased strength on the short-term chart. But let's be honest, there's not like a really clearly defined trend that you can just come in and be like, here's 2 points for my top level, here's 2 points for my bottom level. Yeah, we're sort of waiting for that to establish itself. So there's a little bit of ambiguity here. If someone said, I'm a 2, Scott, I'd be like, yeah, it's definitely strong right now. What I would say is be careful when it comes down. Like, don't let this trick you into being too bullish too quickly. That's unsustainable. So I don't know that I'm going to assess that as the trend until I see one more. All I have is one pause. I need a second pause to get that second point. Then I can be more confident with my score. That's all I'm saying. So if you're a little bit more bullish than me, okay. I'm not saying not to be. Like I said, you could be a 2, and I'd be like, yeah, here's what I would caution you to do. If you were a 1.5, I'd be like, If I came in out of nowhere and saw this, I might score it a little bit more aggressively. So if you ever lack confidence in your number where you're like, I'm just not sure, that's just sometimes how it is. And you just have to trust that the next week you'll be able to dial it in a little bit better, and you're just going to have to kind of put your score in. Obviously, it makes it easier to come here, talk about it a little bit with us. Okay. Let me know if you have any questions about either of those first two. That's trend. This is all about the momentum from trading perspectives, the momentum from institutional perspectives, which is why we put a lot of weight into that in the scoring process. Next up is volume. Okay, so volume is interesting. And I said our score is going to continue to improve even if there's no new above average volume days. Why? Because look at our chart now. You've got 2 days left. Two selling days. And where are they? Those will disappear from this chart by Wednesday. They're still there now, but they're stale, right? They're old at this point. I mean, literally, there's only one selling day after these two here. There's pause days and there's little days. But look at this. That's not even a selling day. That was higher. There's one selling day since these two. That's it. It's just been this steady bullish stream, right? So I have above average here and here. Those are negative, 2. All the way at the back end, I have 1, 2, 3. All of a sudden, remember when we were a minus 0.75, there were like 6 negative days, 1 positive day. And we're like, this is not good. Volume was the one thing. But the volume, as it's only looking at basically the last 22 days of trading, that's what a 1-month chart will show us approximately. We can see that shift has occurred. And now it's 3 to 2, and the 2 is stale, and it's going to drop off pretty soon. It's going to be 3 to 0. Now, the problem is this one is also almost stale. In fact, this one will drop off this week. So after this week, we'll have 2 positive days, no negative days. Yeah, right now it's 3 to 2, goes to 2 to 0. Where were we? Let's see. We were a 0, definitely at least a 0.25, meaning I think you could make the argument, since the only 2 days that are there are the last 2 days, you could make an argument to go to a 0.5 point and say that the buyers have convincingly taken control of this. I'm thinking about it. I still might. I'm going to leave it at 0.25 for now. I'm very curious about this one. How did you score it? Anyone who scored theirs already, let me know, where are you? So that was one where I was like, I could see myself going to a full 0.5 point, but maybe I'll wait until I get like a 2 to 0 next week and then get to that 0.5 point. I don't know. We'll see. Bob says 0.25. All right. Major market. Now what? Appetite for risk. What is happening with our appetite for risk? That's the question that we're answering now. Here is, at this point, our Steven said kept his at 0.25. Okay, fair enough. That's what I started with. Like I said, I was on the fence. Here's our starting point for this. 200 days now puts us back around the early beginning of February. So there was still a little post bear market shakeup in February. We had already found a bottom at that point, mind you, but there was one more little shakeup coming out of that bear market before things really took a turn. Now, I want you to notice that when things turned, you'll notice what happened. The NASDAQ shot up to this leading position. I mean, really by middle of March, you would have seen that. NASDAQ, S&P, Dow. That's the order. Now, the Russell, we know, is that last component. We don't need the Russell to be bullish. We do need the Russell to be full bullish, right? To be like, this is that strongest of bull markets. Everything's in place. But we can get an appetite for risk score of a 0.5 out of 1 without the Russell. Anything to get to a 0.75 or to anywhere near a 1, we need the Russell in place. That's it. That's how this is scored. If the Dow is leading, you're going to be more in a negative position. If the NASDAQ is leading, positive. If the NASDAQ and the Russell, then you're ultra positive, 0.75 and 1. Here, what do we see? As expected, NASDAQ in the leading position. Here's the S&P. Here's the Dow. Russell is lagging. And it's gonna lag until we get to those shorter ones. You're gonna see 133 next time frame, 133 days, more of the same. This is not surprising because if you remember, the 66 day was really over the last little bit when we saw that shift in the appetite. when the Dow moved into a leading position and the NASDAQ fell out. Here, the NASDAQ is still leading, S&P second, Dow is behind, and here is the Russell, still not showing much for us. But when we get to 66 days, here is where we've seen that shift. But what's happened is the Dow, which did move into a leading position, moved into a leading position here during the drop. It moved into a leading position here during the drop. And then what? Then we saw the NASDAQ come back, move back up, and it's now stayed in that position. So our score has increased back up from a 0 back to a 0.5. Why? NASDAQ is leading. The NASDAQ can carry us. That's for sure. What's the Russell doing? Still lagging behind, except what we want to know is there any signs of life? Now, it won't change my score, but yes, all of a sudden, there it is. There's that sign of life we were looking for. What did the Russell do? The Russell, over the last month, has accelerated beyond the Dow and into a secondary position. It's not, people are like, oh, it's a little ahead. Okay, it's not really. Is this enough for me to be like, all right, that's it? It's enough for me to be like, hey, it looks like things are even improving more. It will not be scored until I can see this thing leading on the 66. It won't. We've got to be patient and make sure that the Russell, because the Russell can really crap out on. If you're not careful, you've probably seen it happen. Okay. So what is my score going to do? Stay the same. Still a 0.5. The major market looks pretty good. Overall, more bullish than not. The NASDAQ's in place. It's not the best it could be, but it's good. Sector rotation. Also, you can see at this point, and it hasn't been this way for a while. This is the first time everything is bullish. Everything was at least bullish and neutral last week, but this is the first time everything's been bullish for a while, right? There's been zeros and minuses, and there's been these concerns that seem to have been addressed and rectified. We'll look at the Fed probability chart here in a little bit, but the consensus is that the Fed is going to not raise rates. They're going to leave it unchanged. The second they leave it unchanged, that means people are going to start speculating as to when they start to cut them. I wouldn't think till at least the second half of 2024. I think they're going to let it ride for a little bit, but you never know, right? So, all right. Sector rotation. Same chart, starting out 200 days. Now what are we looking at? Now we're looking at the broad sectors. Wants versus needs, right? Think about if in a great economy, in a great market, what should be happening? There should be a lot of borrowing and lending for things to be growing. There should be a lot of building, manufacturing. There should be people taking vacations and buying cars and buying trips and tech, right? So you got to think, where does that put the money for? Obviously technology and just adjacent to technologies, communication services, which is the people who are marketing and delivering through technology, right? Netflix, Amazon. Oh, no, I'm not sorry, not Amazon. Although Amazon kind of sets that switch, but they're more consumer discretionary. Netflix, Meta, Google, right? And then your information providers. And then you have your consumer discretionary, people buying things. Are they eating out? Are they traveling? And then you have your financials. Are the banks doing well because everybody's working and they're depositing and they're lending and borrowing and buying cars and whatever, right? And then you have your industrials. Are they building things? Those are the 5 that are leading now. That's the point, right? It's not are people buying medicine still and seeing their doctors, and are they turning the lights on and heating their house and buying food and toilet paper and toothpaste? That's your healthcare, your utilities, your consumer staples. That's the lens we're looking at this with. Like, how is the money flowing? Where are institutions shifting money? Where are investors shifting money? So here's the leaders: technology, communication services, We've seen strength there since back in March, definitely, but by May, those were our leading and have been all year. Anytime we're bullish, we've had candidates, strong leading candidates from those two sectors, always. Who else? Consumer discretionary, you can see, also all year. Industrials. Now, energy has been one that we've had to be paying attention to. And then down here, you can see financials is not doing great here. So you can see that of those five, 4 of the 5 are leading. And then who's down at the bottom? Utilities. And financials at the time, they haven't been strong the whole time. Staples, right? Now what? Now we change it. We have to change our starting point in order to now assess momentum. So we go to 133 days. And what if we just start from the last basically 6 months? Who's leading? Technology, communication services, discretionary. Energy still in there. Financials, industrials. 5 plus a little bit of, some inflationary gas prices. Or excuse me, oil prices. Materials a little below that. And then who's at the bottom? Healthcare, utilities, staples. These are your defensive sectors, right? Of course they're down here. What's the interest right now? 66 days. Technology, communication services, financials, discretionary. 1, 2, 3, 4. Then you have some materials, and then the next one is industrials. So those 5 growth sectors are 5 of 6, right? 5 of the top 6 across the board. This is our scoring mechanism. This looks stronger, right? This is a beautiful broad market. We've been talking about the breadth of this market for a little while, saying, hey, the money coming in across multiple sectors. So absolutely yes. I'm going to move that up. Yeah, you can see we really have seen breadth here for quite a while. It was broad for the last 4 weeks, and now I'm saying broader still. I'm going to raise mine up, 0.75. Let's go look at the 22-day just to kind of see. It's more of the same. Technology, discretionary, financials, communication services, industrials. Where's the money going? That's it. That's what you want to know. That's what I want to know. Where is the money going? Question answer. Now what? Now we know that any one of these, we should have a good representation on our watch list of all 5 of these sectors, right? Should we still have some energy? Oh, I was a little bit unconvinced. I actually did not take the WMB trade. I was like, if there was one, I would be this one, and it actually worked out. And I'm like, oh, should I have? I don't know. I'm still unconvinced. I still don't think I'm going to be trading energy. I just want to focus on these 5 bullish sectors. Steven said the sectors have been giving us more of a selection. Agreed. That's great. We should have a very broad and deep. Think about, like, guys, think back September. If you remember, we were like, our watch list was down to like, I don't know, 20 stocks. It was really, really thin. We just were cutting things. We're like, it's broken. We gotta, if it comes back, and we'll reload it. I mean, some of the things we never get rid of, right? Some things we always watch. But now if you look at our watch list, it's robust. It's really fleshed out again. Looking strong. So, okay. 22 days, more of the same. Looks very strong. Here is the Fed Watch tool, by the way. We're at about a 19-1 probability, approximately, of the Fed leaving rates unchanged. We're 2.5 weeks out, 19-1. The consensus is it's not going to change. Okay, so I mean, look at this. Let's see. We're down to the VIX. Obviously, a hugely important component of both our weekly routine and our daily routine. But this was magnificent. Now, I have to ask, because we talked about this. And one of the things we talk about is hedging. Yeah, this is the lowest we've seen it. Friday was the lowest we've seen it since before the pandemic. Crazy, right? Like that was, and back over here when it was around this level here, I bought, was it this one or I can't remember which one it was. Maybe it was both of these actually. When I hedge, I use a formula. 5 weeks out in time, 5% out of the money puts on the SPY. So it's a formula. So anytime I do it, I run that same formula, and it allows me to have a standardization. So I know that it's going to be between 32 and 37 days, right? 32 to 37 days, and it's going to be as close to 35 as it can, and it's going to be within $1 of that 5% mark. So what happens is it's a standardized, so I can compare the price. I bought puts back in September when it was down, and I bought them for $1.30. Those same puts, and this was at let's see if I can find them now. They were the 29s, December 29s, and they were the 432s. Let's go to 432s. I thought they were $1.18, $1.15. It looks like they hit $1.15. So cheap. So what did I say on Friday? I'm like, look, if you are carrying some stock and you decide I'm getting a little nervous, the market's at resistance, we might have a pullback. Oh yeah, I would put a half a hedge on for this price. Yes. For that price, that's the cheapest. That's the cheapest this option combination has been since the pandemic, and God, that's what, almost 4 years? Is it almost 4 years? That's insane. So we will continue to talk about hedging, but yeah, it was cheap. Options have gotten much, much cheaper. What else happened? We broke a low, right? We broke a low. The price is cheap because the market is strong. Yeah, the it's cheap because you don't need them right now, which, you always want to get them when you don't need them, but sometimes getting them when you don't need them means you'll never use it, and then the price just bleeds off. So if you hedge, it's like a few days. If you don't need it, you close it quickly. You take your loss, but it wouldn't be a bad loss because you didn't pay much to begin with. Yeah, what happened? Definitely this thing gets, I mean, you could argue for another, I think you could argue, well, let's just give it the one. We are kind of extended. It is, I do think we're definitely looking poised for some kind of a consolidation. If the pattern that I'm seeing right now, you're starting to lose it over here. Let me get this. Let me get 9 months. Okay, now I have it back again. So, and I want to get rid of that scale. So let me just go like this. And nope. It's about $1.20 now. Okay, there you go. That makes sense. There's the first part. There's the first part. You can see just kind of a pretty precipitous drop. Then you have just a very brief consolidation. And then we got that second part. Bam, right here. You can see this one lasted even longer. Yeah, right here. But so I still think we've got a lot of time left in front of us for this move right here. If you look at the SPY during this time, right, you can kind of see what happens. We get bullish This is where things were recovering, and then they started to get good over here. This is where they were covering, and now what? Now they're going to get good over here. I think we're just getting started based on the pattern that we're seeing here. I think we're looking for the market to break out of these old levels and advance into higher levels into the end of this year and into next year. Based on what? Based on everything that we just saw. Yeah, based on everything that we just saw. Let me go back to the VIX. I'm going to just give it it made a new low. So I'm going to give it 1/4 of a point. We'll see what happens when it comes up. If it makes another lower low, then we'll give it another 1/4 of a point. And then if it makes another lower high, then a lower low, that's what would get us up to about 1.5, 1.75. That's about as good as it gets at that point for the VIX. So let's go look at our final assessment. Our final assessment has us at a 4.25. So we have improved another point. You can see here, we improved 1.75. We improved 0.75. We improved 1.25. We improved 1. This is a very strong surge across multiple facets of analysis. Major market, looking at the sectors, looking at the institution and the hedging activities that they undergo. The institutions right now are more confident than they have been since the pandemic. So whatever else there is, that's what we see in front of us now. Here's the thing. You know that as soon as I say that, my next thought is, well, what would it take? So I'm already thinking about what my my consolidation line looks like here. If I could draw this, what's going on? I still hate these new drawing tools. Something like this. Now, as I look at this, I need to freehand it. As I look at this, the thought is, if I break above that, I'll probably put a half a hedge on, just in case it shoots up here to 18, and I'll have a little piece. If it only shoots up here to 16, let's say, and then it comes back down, and then it does something like this, I'm going to put a full hedge on. Yeah, I always do. That's the hedge signal right there, right? I don't know that that's what's going to happen. What I'm saying is I'm always prepared for things to turn around on me. I know exactly the signal that I'm going to be looking for. Okay, so is our watch list chock full? Well, let's real quickly look at next week's economic calendar, and then we're going to go through the watch list and see if we feel light in any one area. If there's something I'm missing on our watch list that you think should be there, let me know. What sector? What stock? We try to keep market leaders. We try to keep pretty heavy on volume so that there's good options trading, a lot of open interest, a lot of tight spreads in the trading. So here's the economic calendar. Monday, new home sales. There's not much there for us right now. Not worried about that. Tuesday, home price index. You can actually see they're looking for it to stay positive. We're looking at consumer confidence. Previous was 102.6, which was actually a little bit of a positive surprise. They're looking for it to drop to 101. Anything above 100 is fine, even if it drops a little bit, but I actually wouldn't be surprised if it gives us another positive number. Then we have some Fed speak. At this point, I think we're less inclined to listen to the Fed speak because we have a pretty good idea of what the Fed is going to be doing. Wednesday, first revision of third quarter GDP, which came in at 4.9. They're expecting it to stay there. We will get the Fed beige book. We're going to look to see if there's any additional verbiage about if the Fed is starting to think about cuts or not. Thursday, jobless claims, still expected at the low 200, so nothing there. Income spending and PCE. This is the last kind of hurdle Unless there's like a disruptive number where we're thinking 3.4 and it comes back at 3.8 and you're like, what? Like, what? That's anything barring that. I think if it comes back at 3.3 or less, market likes it. Fed's going to do nothing, and on we go. And then Friday, nothing really, but we do have Jerome speaking. I wouldn't expect it to be about something that if it's at the local leaders in Atlanta, is what it looks like. So I don't think it's going to be like a market moving topic. I guess we could see. That is the economic news for next week. Nothing that we think is really all that disruptive or creates the potential to, really start to sway things more than what we're seeing now. Here is the watch list. Let's get this back to 6-month daily. Let me get my watch list up on this side. And okay, so you can see Apple actually started on even though Friday was okay, Apple's kind of turned over. We might get 2 or 3 days. Excuse me. Oh, goodness. Excuse me. We might get 2 or 3 days. We might get nothing more than this. If this turns around from here, you have to be ready to make the decision if that was the consolidation and Apple is ready to go again. This is a hard trend to sustain. Like we said, where at some point we're expecting this maybe makes a pullback and then goes, and then we start thinking, oh, maybe it's right. If it were me drawing the trend, if it comes down into here and starts to turn, I start thinking, you know what? I'm going to connect these dots like this and say we're refinding what we were trying to find before. Thank you, Stephen. But right, we had a little bit of a disruption around here, and then all of a sudden we're back. So yeah, what kind of a consolidation do we get now? This is wherever it goes, I'm buying it, right? Whether it's here, whether it's here, I'm definitely looking to trade Apple coming out of this consolidation. Adobe kind of really hasn't started yet. It's just pushing up against the high still. The stochastic says it has. So I don't know. Maybe we get some kind of a consolidation. We don't have too much longer before earnings. It's sitting out here. But there's plenty of time for a trade in here if we get this consolidation. So yeah, okay. I like Adobe too. Insurance already gave a signal back in this area here. If you took it, and there was 3 of them that did, AFL, AIG, PGR, all 3 kind of gave a similar thing. Now you'd be managing the trade. Yeah, I could see this getting a couple of more days, maybe a target up around 85 for AFL. I would say maybe 67, maybe not 67. I don't know. We could maybe still get something like that. Might be a little high, but you can see the same kind of a signal. This one really started to give back, and you can see this pinched. Little bit of weakness showing up on AIG before Aflac in that regard. AMD, this is a tough one, a hard read. The stochastics is coming down while the price continues to go up. I don't like it. I don't need to like it. I have Intel. I have NVIDIA. I have other chip stocks. That's why we want a broad list. We don't want just 1 or 2. We want 4 or 5. So that if one kind of acts up, we have 2 or 3 others we can still choose from. So AMD, I'm not really interested in. Amazon is a tough one. It just kind of keeps popping up against this resistance. It looked like it was going to come down, but we haven't had much. I'd still look for a consolidation and be willing to trade anything above this level here, probably. So if this does come down and then give us something like this, I think that would be an opportunity that we could trade. APH, overextended. There's nothing there for us yet. We got to wait. AXP, the stochastics makes it seem like it might be trying, but the price isn't. We got to be patient and wait for both. Boeing, same kind of a thing. Looks strong. Industrials, right? BK, a lot of things are overextended in this market that we're in right now. A lot of strength, but it's it's tough to feel like you're buying in late. BX, waiting for the consolidation. Citigroup. So Citigroup, I mean, it kind of is for me. This might be it. That's what it did last time. That was your consolidation last time. It was gonna went downward, sort of sideways for a few days, and then bloop, went again. So if it comes like this and then turns, great. That's easier to trade. It is. But if it does this move here, you've got to be ready if you want to trade that or not. And you might just think, yeah, I'm not going to. If I don't get this classic pullback and then get this little turn here, I'm not going to go. Okay, fair enough. It is easier to trade. Capital One, same kind of a thing, right? We might be in it. We might be ready to turn. The momentum is there. Oil, no. Costco gave a signal. It's moving. You can see it's crossed by a couple of days. First signal came back in this candle here. Now remember, if your stochastics had turned but hadn't popped up yet, but you did have a candle, remember what we said about the concept of anticipating a trade. 5 weeks ago, when our posture was zeros and negative for a minute, we're like, would you anticipate a trade now? Of course not. No way. I need all confirmation in place. As the market has improved each week, I've said I'm increasingly more willing to anticipate and say, hey, if I got one piece of this thing, if I have the candle that I need, I'm going to take the trade, even though the stochastics hasn't quite turned yet, with the expectation that the stochastics is going to. Press says, took some profits off the table and re-entered on Costco. Love that. Love it. There's still plenty of momentum here. Absolutely. This thing could easily break 600. Right? Love it. Okay. Copart. Okay, let's see where this comes. I mean, I definitely would like to see this thing pull back without cratering and maybe find a more sustainable path to its next move up. This got to be a little bit parabolic, we'll call it. It's like a shark frenzy. And things that go parabolic up do have a tendency to sometimes parabolic back down once the momentum's over. Of course, it's hard to know when the momentum's over. It could easily get a whole nother wave of this and be up at 60. So I'm definitely watching this one. It's got some strength. We said we liked it the best. And there was something about the way that it moved and I never got a piece of it. I'd like a piece of it. Okay. CrowdStrike, you've got earnings, and I have better candidates that I'm looking at. Have you guys been watching and kind of reading about the whole open AI and Microsoft thing? That was crazy, right? So OpenAI is privately held. Microsoft owns 99% or 49%, 99. Microsoft owns 49, then it's publicly held. Microsoft owns 49% of it, apparently. So it was a very interesting thing. Okay, let's see what's going on. Dell. I took the Dell trade and it just didn't do much. It was just like, I think it bought lunch. That's what it did. And now you've got earnings. I don't know. I'm a little bit iffy on Dell. I kind of feel like bouncing it and seeing if other things show up better, which is what I'm going to do. DHI, home builders have been strong. Not a lot of inventory still. So yeah, I definitely think that If you like home builders as a consumer discretionary, kind of quasi consumer discretionary / industrial, just looking for this thing to kind of turn out of this consolidation. Yeah, there's opportunity setting up here. I'm definitely got that on my list. Okay, here's the Dow. Here is EA. It looks a little overextended, waiting for consolidation there. Fastenal, waiting for consolidation. There's gold. Google seems to have started now. The stochastics has convincingly broke down. We have a pretty convincing candle here. The question is, what does this consolidation path look like? Right? I'm good anywhere above this. That was my last true low. I don't see in this little window here, I really just see this as one path up. So as this comes down, I'm thinking, where do the sellers push it? And when it turns out, just like Microsoft or just like Apple, I definitely looking to trade it. Gap overextended, hitting resistance, waiting for what comes next. Home Depot. You can see that Home Depot paused, pulled back, and turned. You don't have much going on here. You have a $2 dividend getting paid. If you buy calls, the stock is going to drop by $2. Those calls have priced in the dividend, but dividends hurt you as an option buyer. Just remember that. They cost less right now. You might be like, oh, these options look cheap. Yeah, because they're pricing in the fact that in 4 days, the stock is going to drop by $2. I mean, it's not a huge drop for a $310 stock, but it will happen. Okay. IBM, waiting for the consolidation. ICE, waiting for the consolidation. How do dividends affect the stock price? The stock will go ex-dividend, which means that the price will trade $2 cheaper after the dividend comes out. So basically, the $2 comes out of the stock price and gets paid to investors, and then it trades at the new price. So if it was a big dividend, it can have a huge impact. Not a lot of that going on these days, but $2 is, I didn't realize it was a $300 stock. So it's what, $8 a year on 300? That's not terrible. 2.5%. I mean, it's not bad if you're a dividend chaser. ICE overextended. You know what? I really don't try to time. The question Sandra had was, so given the market, would it be good to buy them afterwards? I really don't try to time around. I'm always going to time around my signals, not around the dividends. If they happen to coincide, then I just have to be like, okay, make sure that you recognize this is what's happening. I don't want to avoid the trade because of the dividend. Like I said, the options are cheaper because it's happening. I just have to sort of, brace myself for what's going to happen. So it's more just a acknowledgement that there is a corporate event happening, but I'm going to trade what I see on the chart. If I have a setup and a signal, I'm going to take the trade. But there's no advantage to be gained by just trading around the dividend. If that's where the questions are going, believe me, I'm like, oh, well, can I short it, buy it back? Can I do this? Can I do that? Nope. None of those things work. Okay. Intel looks great. I don't need AMD. Intel is flagging. Look at this on its second straight. I definitely think there's a third move coming. One move up, consolidated briefly. Second move up, consolidated briefly. Looking for the third move up. Yeah, Intel's definitely on my list and possibly for an early week trade. Absolutely. We'll be talking about that this week. IWM. I think that IWM looks like it's gone through a bit of a consolidation and also looks like this could be turning out. We don't have it down here yet, but it looks like it's close. I think small caps could move again. Oh, are we at time? I thought I was going fast today. Okay, sorry. I'm going to get through the watch list and then we'll talk about the trading plan. I did not mean to steal your time again. IWM, okay, JP Morgan over. Well, no, I can't advance. JP Morgan overextended. Got to be patient. Same with KKR. We like financials, but we've got to be patient and let them go through a consolidation. Meta, like Google, like Apple, is starting. So it looks like we may get our chance this week. Microsoft maybe as well. Netflix, not yet. Still just grinding higher. NVIDIA. NVIDIA's close. Maybe even closer than Intel. Now, if those candles don't start slowing down, there's going to be a concern. But as of right now, you'll notice that if it just kind of slides right here to this old high, this old support, new resistance, you can see, old resistance, new support. Back here, touch. Yeah, that'd be perfect. We'd love to see that. Let's be ready. Absolutely. What was that level? NVIDIA at 470. Love it. PDD. Earnings, too close. We're at resistance. Relax. Let's see what earnings bring. PGR. That was the third insurer that happened. PLTR. Oh. Big candle. Medium candle. Small candle. Right? It's here at support. Right? It's here at support, or it's close. Love it. That's on the list. PNC. Financials, regional banks pulled back. This looks great. Definitely knocking on. Got a lot of signals showing up for this week. A lot of things that look good. Improved posture. We've got things that are either already consolidating or starting their consolidation. All the things that I want to trade. Makes me happy. RCL, maybe starting this pullback. Starbucks has to turn like now, or else it can't keep going. That's 5 straight days. Now the pullback is turning into more of a sell-off, right? So we have to be careful not to just be like, well, is it still pulling back or is it selling off? Shopify overextended. SMCI looks good. I like PLTR better, but if you like this one, definitely looks like it's setting up. SPY a little overextended. Tesla looks like it's setting up for something. Tesla fans. UBS overbought. UMP overbought. Visa overbought. The VIX looks very strong. WMB overbought. Walmart, I don't know if we're going to keep watching this much longer. You can see it's having a real hard time getting off that bottom. Energy kind of flat. Financials look strong. Industrials look strong. Staples and utilities do as well, just not to the same extent. Watch list looks great right now. We've got candidates across the board, right? We've got really strong market leaders across the board in every sector that we like. Everything is setting up fairly well. I'm excited for this week. Okay, real quickly. I know I'm taking your time. Let me go to the trading plan outline. This week we are doing routines. It's an easy one. So if you missed anything from prior, here's how I break it down daily. I go to 3 different routines before the market. And you want to have your the time frame and the time itself. So for example, right, mine is 6:45 to 7 a.m. 15 minutes. I'm 45 minutes before the market. I just go through my routine, right? Do you have trading windows during the market? I don't trade the first 20. Typically I'm going to wait till we're about an hour in before, but sometimes not. And I love the last hour. After market close, doesn't matter if it's 4:05 Eastern or 10 o'clock Eastern, right? What process it. What are your weekly routines? And there are videos. Don't forget, there's a video for routines. And there's a section in the Trading Foundations course, a video in the Trading Foundations course. So there's 2 different videos to help you kind of process and create your daily structure, your weekend structure. After this, you should clean up your watch list. You should make sure your trade log is up to date. You should see if there's analytics that you can look at. You should look at any trades that you're in. Make sure your stops and targets look good. You're happy with the position size and what the chart's looking like. You should have your short list of trades that you think that are most likely to develop, right? All these things. Right now, the chimp's asleep. The professor's at the computer. Get as much work done as you can. Right? As much work done as you can. Then we meet up tomorrow morning and go. So that's what you're working on. This week is routines. bring questions with you to tomorrow. Bring questions with you to Tuesday. Remember, it is our last formal foundations class. We're going to do a couple of case studies of a bullish trade and a bearish trade. And then Thursday is just Q&A. It's wide open. I mean, it's literally, I will not have anything slides. If no one has questions, we'll meet for 5 minutes and call it a day. If you have a million questions, we'll stay for 45 minutes. And yes, I can answer a million questions in 45 minutes. Done it twice. Okay. So I will see you guys tomorrow, 15 minutes before market open. If you haven't joined Discord and started participating, please do so. We're going to try to set up another couple of formal sessions this week. So please do that. Love it. Steven said he had some profitable butterflies. Love to hear it. Well done, sir. Thank you, Bob. You enjoy your turkula. There's a few left. Not much left. We actually had my daughter, my son, and then a couple of their college-age cousins were with us, and we're going to send a lot of our leftovers back with them because they're starving college students. So anyways, thank you guys. Enjoy your Sunday. I'll see you tomorrow. Take care.